أكفرت بالذي خلقك من تراب ثم من نطفة ثم سواك رجلا لكن هو الله.
Hi, this question is obviously it is about PPE. So we bought a building for 250, okay, and the building is going to be used for 25 years, okay, and there is no residual value, okay. So it means there is no value at the end of 25 years, okay. So basically you need to learn how to calculating depreciations. So this is as going to be a straight line method. So formula of depreciation, okay, it is equal cost minus residual value and divide by useful life, okay. I will make it simple. So in this situation we have a 250,000 minus 0 residual value divide by 25 years, so equal 10,000 per year. So the depreciation, annual depreciation, is actually 10,000. So this is the basic step you need to learn. So the requirement for A, it says calculate the annual depreciation charge for the building for 2002 and 2003. This is very easy and simple. So we can say the answer for A, okay. So year and 31st December 2002, okay. So annual depreciation, it is going to be annual depreciation charge equal 250 divide by 25 equal to 10,000 pound. This is for 2002. Then what will happen in the SFP? So in the SFP we're going to say, for example, we say building, how much did we bought? We bought for 250. Then we say less accumulate depreciation, which is 10,000, yeah. So carrying amount, it is going carrying amount is going to be 240,000, okay. So this is what at 31st December 2002, okay. So then for accumulate depreciation for year end 2003, okay. Okay, for 2003, so it is again, it is going to be same, okay. It is going to be same it is going to be same formula it is going to be same formula. So every year we have a 10,000 depreciation. We already calculate depreciation, annual depreciation. So this is, let us annual okay. So for 2003 annual depreciation, we know already it is 10,000. That's what we calculated from here. So 2003 depreciation is the carrying amount, which is 250, yeah, minus how many year? 2 depreciations. So this is end of 2003. So we can say 2 times 10,000, okay, so which it is equal to 230,000, or just like here, let's accumulate depreciation. We can say or we can say obviously the building cost, okay, cost 250, just let me do it underline, okay. So the building cost is 250, that's what we paid. Accumulate depreciation, accumulate, it means total depreciation so far for 2 years, it is going to be 20,000, yeah, and the carrying amount is going to be what? 230, okay. So our building, obviously it is worth 230 at 31st December of 2003, okay. So this is answer for A, okay. So if we look at for B, so B, it says for the year end 31st of December, okay, we have to calculate it, and then you have to state the account entries required to account for the revaluation on January 2004. So it says on January 2004, actually we revaluated our building, it is worth it 253. So we know on 31st of December it is worth it 230. So when we revaluate it, it is actually the price increased to 253. So obviously we can say 253 minus current value 230, okay, then minus accumulate depreciation 20, so it gives us 3,000. This 3,000 we calling revaluation gain, okay. So 3 is revaluation gain, okay. So in here task BA, so it says only state how are we going to record it, okay. So this is going to be B, and B A. So what we going to, how we going to actually recording the entries? So we can say this 3,000, it is gain, it is added to the value of the building. So we can say debit, it is going to be building. Why? Because building is asset at debit, which is 3,000. Then this is 3,000 on debit side. Okay, so on credit side, what is on debit side again? It is going to be depreciation on debit side. Accumulate depreciation on debit side. Okay, accumulate depreciation. Accumulate depreciation again, it is going to be on debit side. Which is so far the total depreciation is 20. So this is again, this is going to be debit. Okay, this is debit. Okay, so there's 23,000 on debit side. Okay, so we need to record 23,000 on credit side. Okay, so credit side 23,000 as a, where is coming from? 23,000 is coming from the revaluation gain. Okay, coming from here. Okay, because 53 minus 30, it is equal to 23, then 23 minus 20 is equal to, so revaluation gain, okay, as a 23,000. Okay, so this is A. Then we have to answer part B. Second part, it says calculate the new annual depreciation charge. So obviously the new value of our building, obviously it is 253,000, same as here. How we going to calculating depreciations? Okay, so remember the building had a 25 years life, so it is 2 years past, so it means it is going to be okay, divide by 23 years, so which it give us annual depreciation of 11,000. Okay, so new annual depreciation is that. Okay, 11,000. This is done, and it says what will happen, same as here, where how we recorded in the statement of the profit and loss. So in the statement of the profit and loss, how did we record it? In here that it says carrying amount, instead of the carrying amount we can say is PPE carrying amount, okay, for statement SFP. Okay, SFP 240,000. Okay, so we can say in here, copy that, bring it there, PPE carrying amount for statement financial position, which is no, it is going to be what it is going to be 253 minus 11. Okay, so which is going to be equal to 242,000. Okay, 242,000, but at when? At which year? It's not 2002, not 2003, it is at 2004. Okay, then the last part, it says Okay, it says calculate the exceed depreciation charge as a result of the revaluation shown in accounting entries. Again, because they made another revaluation on for the following next year, because they sold it for 245,000. That's what we expected to be the value at 31st of December 2000, but obviously we sold it for 245,000 pound. So we need to do some sort of the calculation in here. So first of all, it is increase. Okay, it is going to be increase in depreciations. Okay, charge from 10,000 to 11,000. So depreciation charge increasing because of what? Because of the due to revaluation, because we revaluated, that's why the depreciation is increasing, obviously. So increasing revaluation by 1,000 pound. Okay, so increasing by 1,000 pound, that it is the 1,000 pound is coming from 11,000 annual depreciation minus 10,000 the old depreciation. Okay, then we can say transfer, what? Transferring from revaluation. Okay, surplus, because it is increasing. Okay, increasing the surplus. Okay, to what? To retain earning, because it is increasing and we're gaining more money. Okay, retained earnings. So where do we record retain earning? Retain earning is recorded in the equity sections. Retain earnings within statement of changing in equity. Within, where do we record it? Within statement of statement of changing in equity. Okay, so then how we going to record it? So we can say debit. It is going to be, what is debit? So debit revaluation revaluation surplus plus of 1,000 pound. Okay, and credit what? So we need to credit 1,000 pounds somewhere. Okay, so we're going to credit retain earnings from here. Retain earnings from here, that it says we gain retain earnings. Okay, so it's going to be retained credit retain earnings of 1,000 pound. Okay, so the 1,000 pound is coming, actually is from the revaluation of where? Okay, surplus. Okay, on statement financial position, not statement of changing in the equity, financial position, that equal to 23,000, which is first revaluation gain. Then after that we revaluated again for 45,000. Then we made a 1,000 pound as a gain, so that it gives us 22,000. Okay, it gives us 22,000. Then the last part, C, C, it says in the question, says for the year end 31st December, calculate the gain or loss on disposal on the building and state the financial transfer required from revaluation surplus to retained earning upon disposal on the building. So in this situation, obviously, is we have a disposal. Okay, so we can say, yeah, ended 31st December 2005. So we can say disposal proceeds proceeds from where? From 245,000 that we revaluated and we gain it, because that's what we sold it for, 245,000 at 31st of December, on 1st of January 2005. Then minus carrying amount. Okay, so what was the carrying amount of PPE that equal to carrying amount of the PPE of 242,000. Yeah, so that it gives us £3,000, which is coming from above, from here. Okay, this is we calling as a gain. This gain we're going to record it in the equity again, gain on disposal. Okay, and then what is left actually is transfer remaining of what? Remaining balance remaining balance on revaluation. Okay, surplus to where? Because we have to transfer, because that's what we're gaining, to retain earnings. Okay, in statement of changing in equity. Okay, that is equal to 22,000. This is what we gain after disposal. So DR, debit, revaluation gain. Okay, so plus of 22 and credit retained earning. Why credit? Because it is anything in the under equity is credit, retained earnings, and it is income anyway, of 22. Okay, thank you.